Welcome to the Money Making Money podcast.
Yep.
With our host, Mark Anderson, Albert Ceja, myself, George Aplicano, and our special guest, Thiel Ruperto.
Hello.
Hi. All right. So just should we just dig into it?
Yeah.
All right. So introduction to Thiel Ruperto. He's an investment advisement specialist. Right?
Close enough.
Close enough, right?
Investment advisor representative.
There we go.
Official title. I don't use it anymore, though.
Right. Yeah. Your reputation supersedes your title. Yeah.
I hope.
Right. You hope, right? And so he's been an investment advisor for 19 years with CalChoice. Your main objective is to try to get tax-free retirement, or just to try to help people with their taxes on their investments, right?
Mm-hmm.
Correct?
Future income.
Future income, yeah. So we don't know much about that space, so that's why we brought you in here.
I don't either. So we're kind of screwed right now.
Like, I don't know why you guys brought me in here.
We offered you beer, and so you showed up.
That's right. That's all it takes.
And then we don't
Beer
even
and
have
pizza.
beer.
So, Theo, I would assume you deal a lot with 1031 exchanges?
Not too much,
Not
actually.
too much? Okay. Because that's also kind of a future.
Yeah, 1031. Yeah, 1031 for mortgages. For homes, right?
Yeah.
Yeah, we don't do too much of those because what we focus more on the investment side in terms of our land banking platform is people's old 401ks, IRAs, somebody that's sitting there doing nothing, or our clients are afraid of the market volatility.
Okay.
And so we want to shift those assets into real estate.
Okay.
And land is a perfect opportunity to invest in, because when you think about whenever the market crashes, well, it usually goes down in value.
Oh, yeah.
The dwelling.
The home values, not the land.
The land maintains its value pretty
it always
well.
does.
Yeah.
Right.
Yeah.
So it's more of a different asset class, because a lot of people, they're like, yeah, I'm diversified, but all my money is in the market. How is that diversified? It's just a big basket with a little small basket inside it. The whole basket falls. What happens to your money?
It all falls.
It all falls, yeah.
So what we're trying to teach people is, hey, why don't you have a different asset class, which is real estate? So if the market does correct itself again, that's a nice way of saying crash, right?
Okay, you're right.
Is that's going to be protected from the market, because they have
Yeah.
nothing to do with each other,
Yeah.
right? And so then, if you think about a lot of millionaires out there, you look at their portfolios, what do they have all in common pretty much?
Land or
Real estate.
Real
Real
estate,
estate, yeah.
Because they believe in true diversification. And with our company, we changed it because we work with a lot of different clients. You don't have to be wealthy to be a client. Minimum investment, guess what it is? 40 grand.
Okay.
Okay.
And you could invest into a parcel at 40,000.
40,000. Yeah.
And you could use your IRA sitting there, your 401k, you can even do cash.
Really?
Yeah.
Wow.
So it's really good stuff. And right now, the returns that we're seeing since 2008 has been about 20% per year.
20%.
Wow.
That's
Wow.
awesome.
Wow.
And holding time is about 7 to 10 years.
7 to
Okay.
10 years.
Okay.
Okay.
That's what we tell our clients. But realistically, we did this study. It was actually 24% per year, and average hold time was 3.7 years. But we don't say that.
Right.
Yeah. I know.
Right.
Right? You under promise and over deliver.
Over
That's what it is.
deliver.
Yeah,
Okay.
exactly.
Wow. That's pretty good. 20% over. Wow.
Yeah.
Okay.
So we're pretty busy in that space.
And is that the main space you concentrate on?
This is part of it.
Okay.
Because we're a true financial planner. We look at the overall picture of a client. To give you an example of a client currently, I gave him a choice A, option A, B, and C. Option A, he does nothing but what he's doing now. By the time he's 65, his income would be about $12,000 a month. It's not bad, right?
Wow.
It's not too
But is that counting for inflation?
Oh, okay.
3% per year, right?
Yeah.
And he would have paid about $1.4 million in taxes.
How old was he?
He's 36, 37.
Yeah. So, okay.
Yeah.
So 30 years, right?
So imagine paying $1.4 million just in taxes for his income. Instead, option 2, you put part of my plan in and you still do what you want to do. His income would have gone to $20,000 a month. And he would have paid about $900,000 in taxes.
Oh, wow.
Yeah. And I tell him, hey, do what I asked you to do and show you. His income was $30,000 a month. Tax-free. This is all tax-free, right? And his taxes that he paid, that's net, actually, not tax-free, net. but his taxes overall that period of time is only 200,000.
Oh,
Wow.
So do you think that's a big
Right,
deal?
that's a
That's a
big
big
Yeah.
jump.
And part of his plan is actually investing in land
yeah.
because he wants to make sure it's diversified. And other things we do, we have tax-free retirement planning. So pretty much you invest money, the market tanks, you're at 0%, so you don't lose money. But then you go up to 16% as well.
Okay.
So you have that
Oh, wow.
space, right?
Yeah.
And guess what? If someone tries to sue you, they can't touch your money either. So that's kind of nice.
Wow.
So is it protected by an LLC, or how is that, or is it because of your
By law, actually.
by law? So is
Yeah.
so somebody had asked me is a section 203 the difference between an active investor and a passive investor?
Okay.
Is that
So active investors, I'm actually an investment advisor representative. I have all my licenses. I've had them for a long time. And currently, I don't steer my clients into what they call it, stock market anymore.
okay.
Because the last 20 years, actually from 2000 2018, well, guess what the net return of the S&P 500 has been?
I'm going to assume 3%.
Close, 2.85.
Oh, wow.
And you hear from everywhere else, like your advisors and those big name companies, I can't say, I don't want to get sued or kind of thing.
Yeah.
They say, oh, yeah, we average 10%, 12%. Averages don't count. It's the net that counts.
Yeah.
You guys agree?
Mhm. Yeah.
Give you
absolutely.
example.
After
If-
all fees.
Yeah. If you had $100,000 today and you made 50% tomorrow, how much do you have now?
150?
Right.
Okay.
Yeah.
Next year, you lose 50%. Where are you at now?
100K.
Oh, no.
Or no, you're at like
It's
75.
75.
Yeah.
What's your average rate of return?
It's
Zero.
negative at this point.
No, 0% is your average rate
Oh,
of
yeah,
return.
because you were at 100.
Yeah, 50 plus
that's right.
50, right? Divided by zero,
Yeah,
right?
now you're below.
How come your money's less than your average?
Yeah.
They don't teach you that.
Oh.
The reason why those advisors and those other companies want you to put their money in there, they tell you, oh, when the market's up, it's great, keep your money in there. Market goes down, keep your money in there. It's gonna
Go back up.
go
come
back
back.
up.
Yeah.
Where the hell are you gonna take all your money?
Yeah, I know.
Right.
Because they make money from your money,
Yeah.
so they're not gonna advise you to do what we do as a company, CalChoice, is because we don't have that. We don't get paid every year. We get paid once and that's it. The rest is yours. All your profit and everything else.
Yeah.
Those advisors, they get this thing called assets under management. You get 1%. It depends what they charge you every year for forever until you take your
Wow.
money out. So who's making more money now?
Right.
Those
They are.
advisors.
Yeah,
they
the advisors
are.
are.
Right.
They are. Yeah.
That's why we're fighting against the industry about this. How they're forcing people to like fall in love with the stock market when it's the most volatile place there is,
Yeah.
right?
Yeah.
Wow, and you hear that from a lot of people. I mean, it's rare when you hear somebody saying like you saying that. Oh yeah, we don't even advise them to go into the stock market anymore.
Unless they really, really, really want to.
Yeah,
Yeah.
you can. Yeah, you
I say,
can
okay, I'll
no.
put percentage. I can still do it. Don't
Yeah.
get me wrong. I have my licenses. I still put people in the stock market,
Yeah,
but it's only a small percentage now.
yeah,
Because the risk is not worth the reward anymore. If it starts switching again, if the market is really
Switches,
good,
yeah.
then we'll start putting more people into the market. But right now, it doesn't make sense.
yeah.
When you're fixed, the stuff we do is doing 6 to 8% without the risk.
Yeah.
And you're
Wow.
getting 2.85% with the risk.
Yeah.
That's a no-brainer.
Yeah.
Unless you
makes
don't,
sense.
unless you don't like math, then it's a different
Right.
story.
even on a worst case scenario, if everything went crashing versus the stock market goes to zero, right? At least you own a piece of land, right?
Yeah.
Right. In your strategy.
Yeah, you're right. Yeah, you still own some real estate. Yeah.
Own some real estate. Yeah.
Now, do you do that through like a capital fund, or like how do you manage a hard asset like that?
So for the land side,
Yeah.
to manage that, we have a company we work with.
Okay.
So if it's going to be a qualified plan like your IRAs, everything else, it goes into a trust.
Oh, okay.
And it's going to be a self-directed IRA. That's what's the vehicle we use. It could be a self-directed 401k. It could be, as long as it's self-directed, you're able to invest in other things besides the stock market with your retirement funds.
Okay.
So if a person has a 401k, let's just say they work for a big,
Mm-hmm.
big company, and it's not self-directed. It's not
Okay.
self-directed. Would you be able to assist them to move it to a self-directed
Correct.
401k? And
As
then
long
from
as they
there-
have access to it, that they
Okay.
can actually move it. If they're currently working there
Yeah.
and they don't have like in-service rollovers or anything like that, then no, you can't touch it until they leave
Yeah.
Yeah.
or they get fired
Right.
or something.
Okay. Not even a percentage or anything like that? No. Okay. Just
Unless they have that in-service rollover.
okay.
If you're 59 and a half and older, then you're able to do that as well.
Oh, gotcha.
It depends on the company. Every company is different. What their laws are. I mean, the documentation for the retirement plan is. That's
okay.
that actually will tell you what they can and cannot do.
Oh, okay. You know?
And you said with that one you can also do cash. If you want to invest cash in the
For land, yes.
Yeah.
You don't have to do a qualified plan. It could be cash.
wow.
It could be a Roth IRA as well, which is even awesome. You guys know how Roth IRAs work?
Yeah.
Go ahead and
Basically,
explain
it's
this
after
to us.
tax money you put into like a retirement plan called a Roth IRA,
After tax, okay.
but the growth is tax free.
Oh, the tax free?
Yeah.
Oh, really?
But there's still regulations. You have to wait till
Yeah.
59 and a half to take it out and everything
Yeah.
else.
Okay.
But guess what? You're growing this tax deferred, but when
Yeah.
you pull it out, it's tax free.
Okay.
How awesome is that?
That's awesome.
It is.
So you could do all these things that kind of reduce your taxes.
Yeah, taxes.
Unless you
Right.
like taxes, like I said.
Right now.
I know I don't, but I
So,
still
yes.
pay them, but I don't really like them. I still
Right.
cuss. But
Unless you like taxes. Oh, no, I love paying taxes.
Yeah,
Now,
not it.
is it just land that you do, or is it also real property too?
currently, it's just land right now for
Okay.
our company
Mhm.
because it's there's less work in terms of understanding how things work. Right, you don't have
Okay.
to worry about if the dwelling is there's no maintenance on the dwelling.
Yeah, that's
No.
true.
It's just land.
Yeah.
Right, you buy land, you hold on to it,
And
it
that's
grows
it.
in value, you sell, you get money back.
Yeah.
Yep.
You make a profit. Everybody knows that.
Yep.
When it's real estate, it's like, well, it depends on the cost, this and this,
Yeah.
and that. And
Yeah,
it gets
yeah.
more complicated.
Yeah.
And we wanted for our investors to be kind of keep it understand it a lot easier because we already have the complicated side of the whole financial planning side.
Yeah.
Now you add on the other stuff, then they kind of get confused.
Yeah.
Keep it
Oh, yeah.
simple.
Yeah.
Keep
I like
simple.
keeping it simple.
Yeah.
Yep. Keeping it simple. That's
Right.
But
really
so
good.
most of my clients do have other real estate investments as well. So,
Okay.
like
And
they
do you
own-
help? Do you like not train, but like educate your clients to make these decisions also? Or
Mhm.
okay.
Like we educate our clients. We talked about this before. How it's a bad idea to pay off your mortgage
Yeah.
just because of taxes, because you want that interest
Yeah.
and a deduction to
yeah.
offset the taxes you have in retirement.
Mm.
So a lot of people look at me like, you're crazy. I was at a party this past week for New Year's, and I was talking about this concept. We're like, we paid off our house. You're crazy. And I said, I'm like, it's math. And I started breaking it down. He's like, I never thought of it that way. I'm like, you're paying more taxes now, right? I'm like, yeah.
Oh, go get a
Yeah.
mortgage.
Right.
Get a refinance.
Yeah,
Right.
refinance and take the
Because-
cash out.
Think about it. If you have another mortgage, but you could pay off your mortgage, are you actually in debt?
Mhm.
If your mortgage is 500,000, you have 500,000, you could pay it off anytime.
Yeah.
You're not
Yeah.
in debt. That's what we're trying to get people to get to is you have the cash to pay off your house, but you don't pay it off, so you could take advantage of the interest deduction.
Yeah.
The biggest one that we have.
Yeah.
Come
Yeah,
on.
that's true.
Unless you don't, unless you have a business,
Yeah.
the mortgage is the biggest deductions we have.
Yeah.
So
Wow. And so
And you can always use that cash for other investments.
exactly.
Yeah.
If you want to buy another investment property,
Yep.
now you even have more. You can.
Yep, exactly. Oh, okay.
And if you want to go back to the standard, get that money, pay off your house, then you're like everybody else now,
Yeah.
right.
paying more taxes.
Right.
Yeah.
Paying more taxes and
Now, is this concept with the land, is this something that's new?
It's
Fairly
been-
new?
It's been around, but we're the first company that actually made it accessible for more people by
Okay.
having that $40,000 minimum.
Minimum.
Because a lot of people that does this, they they have to invest about 300, 400,000 just for for a parcel because parcels are big, right?
Yeah.
Yeah.
You don't see a lot of small parcels because if you want to subdivide, it's a lot of money.
Yeah, yeah. Yep. Okay.
So just kind of help me explain this. So
Sure.
say for example, so CalChoice selects the land, right?
Mhm.
And I'm assuming that they have their criteria within an area, an
High growth area,
high
correct.
growth area, right?
Predictable growth. too.
Predictable
Mhm.
growth, right? And so then from there, so say for example, somebody comes in with 40,000, is that a percentage of that
Of that parcel.
Okay,
Yeah. So if you have a parcel that's 400,000, you come in 40,000.
yeah,
You own
right.
10%.
10%.
And it's a tenants in common agreement. But what I love about it though is if someone comes in the first year and say I want to offer 20% over, what you guys paid for it, so it's 20% growth, and one person decides they want to sell in that parcel because for example there's 4 partners in that parcel, right? Then everybody has to sell
Oh wow. Okay.
unless the other 3 partners want to buy them out.
Oh, I
They can
see.
do that as well. But if all of them say no, then it won't be a sale. So there's ways to protect yourself too, because if you want to get rid of it and everybody else doesn't, then they'll buy you out or they'll sell the parcel.
Okay.
So there's an out. which is kind of cool.
Yeah,
Okay.
that's not bad.
So you're not stuck. Because
Good.
lands, you actually, even though it's a path of predictable growth, it's still going to take some years.
Yeah.
Yeah, yeah,
It's more of midterm investments, not short term.
Right.
yeah.
So we say about 7-10 years. The worst case scenario, it goes to 15 years, but
Yeah, I
it's
know,
long term.
still.
Yeah.
Right.
I mean, you're planning for your future, so you
and you can will it to your kids. You can do anything you want. So it's kind of
Oh,
cool stuff.
nice.
Well, that's good. That's good that you can that they can access their money right away because
Yeah.
if you buy a parcel of land on your own, just on your own, then all of a sudden you have to turn around. If
And
you need
sell
that
it.
cash, you
And
need to
sell
sell
it.
it, and whatever somebody's willing to
Mhm.
pay for it
Yeah,
at that time
exactly.
is kind of
Yeah.
like where you're stuck.
And like any investment, you know the risk, right? It's
Mhm.
land.
Mhm.
But as long as you have all the information, which we give you a whole report of that area and the growth and everything else,
Mm-hmm.
then you have a better sense of, yes, I did the right thing.
Yeah.
Put it this way, I have clients who's investing 300,000, 200,000. I'm working on one right now. It's like 350,000. So people see the value,
Yeah.
right?
Mhm.
But at the same time, right,
Yeah.
they have to know what the risks are as well.
Yep.
Right.
Exactly. Now, do you guys for this land? Is it pretty much all over?
It's actually in Southern California.
Okay, Southern California. Oh, California.
Well, then
Yeah.
there you
So we always say, even if you hate California, you still like their money, don't you?
Oh yeah.
Money is still money from California.
Yeah.
Right? It doesn't matter,
Yeah.
right?
Wow. So you'd be buying California land without paying California taxes.
There you go.
Right.
That's another advantage too.
Oh, wow.
Because you don't live there, right?
Right. You
Yeah.
don't live there. Yeah. Exactly.
Because the area where actually we do a lot of our business in, it's the last affordable housing in Southern California. It's actually in the Antelope Valley area.
Antelope, okay.
And so if you think about it, what's the average cost of a house in the LA basin is about 550,000, 600,000. Orange County is going to be like 900,000, right? In that area is about 350. You get a 3-bedroom, 2-bath,
Okay.
a nice yard. And, the industry in that area is huge, the aerospace industry. Warren Buffett's a big investor there. He built like a $2 billion solar farm or something crazy.
Yeah, so
Wow.
that's just gonna grow.
Yeah. And so, what's good is our executive vice president. He's actually knows the mayor of that area. And
Oh, wow.
they actually ask him for advice and everything. So he knows where all the investments are happening. So
Oh,
that's where we
nice.
buy our land. So CalChoice will buy the land cash. They make offers for all this property. So they have it they own it
Yeah.
before they sell it to our client. So for them, it's a risk if they can't sell it.
Mhm.
So they have to make sure the land is
Yeah.
a good land to sell,
Yeah,
right?
good investment. Yeah.
Yeah, so that's why I'm comfortable with. I invested myself because I was there last year, and the first time I saw the land, the actual property, I'm like, I'll be stupid if I don't.
If I
invest
don't
there.
invest in
I
it.
got home, I called them up, and say I want to invest this much.
Oh wow, that's pretty good.
That's good.
So how long have you been doing this financial planning?
In the industry, I've been since 2002,
Okay.
and with this company, I've been in this company for almost exactly a year.
Okay.
Yeah, next month gonna be a year.
And what was your background prior to that?
I had a lot of different backgrounds. So my college major was molecular biology.
Oh,
Really?
wow,
So-
okay. Okay.
So first year out of college, I worked as a biologist. I didn't like it too much, and then I got into chemistry. So I worked as a chemist for a couple of years, a production chemist. And I'm like, you know what? This is boring. I'm working in the lab by myself. I feel like I'm, killing myself or something. Because, you have all the chemicals and everything else.
Yeah.
And I decided, hey, I want to go into computers as well because I always enjoyed computers. So I became a network engineer.
Okay.
So then,
That's all
convoluted.
good.
Yeah.
So then I became a network engineer. I did that for 17 years. But in 2002, I got into this industry part time. So I started learning more about it. And in 2015, I left the engineering and started doing this full time.
Okay.
Because my wife said, you got to pick because, you come home, you bring your homework from your engineering, you're always in a bad mood. Your kids don't want to be around you.
Yeah.
So I'm like, hey, it's easy. I'd rather do my business because I enjoy helping people understand and educating them about their own personal finance. Because if I could get out of my debt I was in, right?
Yeah.
Everybody can. When I first started this company, I was $55,000 in debt.
Wow.
Student loans, right?
Yeah.
It'd
Yeah.
be more if it was today, but just a long time ago. Car loan, right? Credit cards. And I paid that debt off in like 3 years.
Awesome.
Nice.
Really?
Awesome.
Wow.
So I hate debt. The only debt I like is one that makes me money,
Yeah.
right?
yeah.
Which is real estate
Assets, yeah.
assets, right?
Yep.
And we do a lot of arbitrage. You know, we have an investment where you could put your money in, and once it grows, you can take the money out. You could lend yourself money,
Okay.
and the money you're using, you can actually earn interest on it while you're using it.
Oh, awesome.
Really?
Yeah.
Wow.
And so you're paying back
Yeah, your own loan.
interest
Yeah, you're paying-
on
yeah.
if you're
On
pay-
money.
because
Yeah.
right, when you take it out, you're charged an interest rate, right?
Yes.
But still,
Think about it this way. For example, you're paying 5% in interest, right?
Okay.
The market does 10%. You're using this money, yet you're making 5% from money you're using. You
Yeah.
bought a car with it. Your car is earning you 5%.
Yeah.
Oh, that's awesome.
Instead of paying-
So these are kind of concepts people don't realize exist and is out there. We should have to learn about. It's all about education.
Yeah.
that's why we brought you in.
As you can tell, I love this stuff because
Right.
Yeah. No.
I never knew I was going to be in the finance industry.
Yeah.
I'm like, I'm going to be a
Oh.
doctor. I'm a finance doctor now.
All right. We met in 2016.
I thought it was longer than that.
Longer than that? 2015. So right when you were getting out of that, right?
Yeah,
Yeah,
I
because
think it
I've
was
never
before
seen you angry.
I haven't been angry. I've been happy so far.
He found his zen.
What pisses me off is how the industry actually lies to their clients
Yeah.
and try to make them do things that's not suitable for them.
Yeah.
And if you think about it, if you know the industry a little bit, people get sued all the time, like the companies, and they have to go through this arbitration. I don't know if you know this.
Mm-mm.
Guess who they hire for the arbitration?
Their own lawyers. I'm
Their own
assuming.
people that they know. So whose
Oh,
favor are they gonna go?
Oh yeah.
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 So about the fox is guarding the hen house, pretty much.
Yeah. Yeah.
So that's why we're trying to change that whole persona about the industry and try to tell people, hey, this is what's available out there. You make your decision.
Yeah.
Right? Because like I said, fees and risk on the side of fees doesn't count anymore. Does not work today.
Yeah.
Yeah.
Wow.
Sorry, I get really crazy. I can talk forever about this.
So
Go ahead.
so you do this full time? So this is your full time job now.
Sure.
Yeah, exactly.
It's the only job I do. How about that?
All right, there you go.
And we were talking about earlier how I need to put more hours in because it is when you're teaching people about things like this and they understand. It's not.
Yeah.
You're not even selling anything. Actually.
Yeah, exactly.
Like I give people 3 options. They always pick one
Yeah.
because they know the value we actually can provide. The only time anything gets delayed is they want to understand something in more depth, and that's fine too because the more someone learns, the better they are financially in the future.
Yeah.
And they teach their kids, and the kids teach their kids, so it's all generational.
Yeah, that's pretty good. That's really good. Yeah, and you probably get a lot of them that are depending on what the fees are higher on that they try to steer you through. Is that what you get a lot of
You
from like you're saying from the competition? Like you said, you like to educate. You like to make them. It's their decision.
Yeah. So basically, the biggest thing I've seen is because I've been in the industry for a while is what we do as a company. We try to minimize the fees as much as we can, so more money would go to our client's pocket.
Okay.
Okay.
So we design products, we design certain things that give example like previous company I've known about. They would say, okay, yeah, we're making $6,000 on this, right? But the client doesn't make enough money, it's enough money for it to grow.
Yeah.
Well, we say we'll give you the same thing, except we're going to charge you $2,000.
Yeah.
Okay.
So we celebrate when we make less money. How weird is that?
Yeah, that is weird. But that's what you want. I mean,
Because in the
as a
future, what's going to
client.
happen?
Yeah.
They're going to say, hey, they did the right thing for me. Now more business can come your way
Yeah.
anyway.
Exactly.
Yeah. Yes.
So do the right thing for your clients.
Yep.
And knowing this now, I could never go back to the old way of what I was taught before
Yeah.
because now I'm like, that's stupid.
Yeah. So when you started, you were pretty much it was in the other aspect where you were in those companies that.
Yeah, I didn't know any better.
Yeah. No. Yeah. Of course.
Yeah.
Exactly. You were barely starting, so you were like, okay, it's probably the norm.
Yeah.
Until you started learning more about it.
That's
Okay.
why education is so
Yep.
key. I have
Okay.
clients, now old clients, that were redoing their whole plan because I'm like, I didn't know. I apologize.
Yeah.
I'm sorry.
Yeah.
But we could get you to the right track now.
Yep.
And they're like, thank you for letting
at
us
least
know.
know,
And now
yeah.
we're doing that too.
Wow, that's pretty good. That's really good.
So, and then you had we had lunch, a couple of weeks ago, and
Yeah.
you had mentioned, so like even on your, and this may get a little personal, right? But even on your comp structure, right? You don't make money unless your clients make money, right?
Correct.
Right? Yeah,
Yeah.
exactly. So,
So it doesn't make, I like about our company too is our agents. they start off high, right? High percentage.
High,
Mhm.
like, is it too much weed? I don't know.
Well, that'd be good
That's
too.
a
But
different-
I was just in Jamaica a couple months ago.
Oh,
Oh,
see?
wow. Wow.
That's what I love about our company is you do well, they send you to great places. We're going to
Wow,
Belize
that's-
in March.
Oh,
Then
nice.
this quarter contest is actually Costa Rica.
Oh, wow.
So they pay for everything, and I learned how to scuba dive. So I love scuba diving now.
That's a bucket list thing, yeah.
But it's great where you're helping people get what they want, and you're getting what you want,
Yeah.
right? Because
I like how you describe it, though. You're not coming off all salesy with it. You're educating your client, right, and then giving them the option to say what they want to do.
Yeah.
Because that's what I want to be. I want to choose what I want.
Yeah,
Yeah.
I don't want
exactly.
someone to tell me, hey, you gotta do this. Like, why?
Yeah. Yeah, you're right. Yeah.
Nobody likes that.
Yep.
Nobody likes the people. We all love to buy. We just hate being sold.
Yeah, exactly.
Right.
That's very true. Yeah. That's so true.
So,
Yeah, go ahead.
kind of sorry. So walk me through. So say for example, a new client,
Mhm.
right? They're looking at their 401k and they're looking at their assets and they're going, I don't know,
I don't know what to do.
right? I don't know what to do, right? So they'll contact you,
Mhm.
right? So walk me through how you would review, like a basic structure of how you would kind of.
Great question, Jordan.
Yeah. What's going on?
Geez, that wasn't pre-planned at all.
That was out of the blue. No?
It took me off. Thanks.
So pretty much the first thing is getting to know your client. You gotta, just like a doctor. If you come into a doctor and says, I'm sick, and the doctor says, what's wrong? And you tell them, I don't want to tell you. I'm not going to tell you my symptoms. How is he going to help you?
Yeah.
Yeah.
So first thing we do with a client, we say, okay, what's your concern? What you really need to accomplish, or how come you're meeting with me or asking me these questions, first of all. Next step is getting their their finances, everything. Like getting me, their assets, all their assets, their income, when they plan to retire, right? The Social Security planned income, right? Because we want to plan into that because of this income tax for Social Security. We want to make sure we prevent that, right? Do you guys know about that?
No, I don't.
Yeah, up to 85% of Social Security can be taxed
Oh.
if you have a high provisional income coming
Oh,
during
really?
retirement. Yeah, yeah.
He's making notes.
Yeah,
He's gonna start crying.
Right.
Yeah.
I had it planned.
So basically, once you have all that information, what I do is I take a few hours. It takes me about 2 to 3 hours, sometimes 4 hours, depends how complicated something is, and start designing a plan for them in order to maximize what they have and what they can do. Right, start shifting assets around. What you need to do with this asset, how we can prevent taxes in the future, and what your income's going to look like.
Yeah.
Because if you think about it, retirement's all about what? Income. Doesn't matter how much money you have in the bank. It's how much income you're making.
Right, and how long that's going to last you for the rest of your life.
You could have we'll say you have $1 million in the bank, but your income is only $40,000 a year.
Yeah.
You're like, I can't live on that. What are you gonna do?
Yeah.
Right. But if you're in your bank, you have 500,000, or not bank, but an investment, but you're making 80,000 from that 500,000. Does it matter that you only have 500,000 versus
Oh,
$1 million?
Yeah.
Yeah.
It's the income that matters.
Yeah.
the income,
the
right.
income is coming,
You're
yeah.
replacing your income for the future. So that's what we would do. We would plan our income. We would plan taxes. It's college planning for families that want to help their kids go to college and everything else. Since it's so cheap right now, right? No sarcasm. But that's the beginning. And I've had clients. I met with clients. I said, I can't help you. I just tell them I can't help you
Right.
because you have everything in place already. It's good.
Oh, okay.
What am I gonna do?
Oh, okay.
Sometimes I have clients that don't want to listen to me, and I tell them I can help you because if you're gonna have me help you, but you don't want to do what
What
I'm
I'm
asking,
saying,
it's
yeah.
not gonna happen.
Yeah,
either.
it's not gonna help you
Right
out.
on.
So I'm not afraid to tell someone, hey, I really can help you.
Yeah.
If you don't want to be helped, you have to help yourself if we can help
Yep.
other
Yeah.
people too. So
And so then part of that education is with giving that education has them look at things in a different light. So yeah,
but this wide clients I've been talking to for a year before they did anything with me. They just asked me questions here and there, and eventually became clients because they understood the value of what we're asking them to learn about. So
Well, that's similar to the real estate too. I mean, most of the clients, as a realtor or even a wholesaler, like you gotta build a relationship with these people.
Yeah.
And it may not be today, but a year down the road, eventually they want to do something with you.
yeah,
just because of that relationship you built.
You bring value,
Yeah.
right?
Yeah.
You can't keep always taking. You have to bring value as well. Just like you guys. You guys all partners together because each of you bring value to what you're doing. I love it. I knew that was happening.
No, we do.
Yeah, my point is gone. But that's what it's all about, right?
Yes,
Yeah.
And you have to like the people you work with too.
Yes,
Yeah.
for sure.
Yeah.
That's for sure.
And like I said, once you understand what you're trying to do, it becomes a lot easier.
Yeah.
And because I had a client tell me one day, she's like, you know what, I feel like a relief because I know my plan now. It's not
Yeah.
like
It's
depends.
like
Right.
nothing. Yeah.
Like the industry will tell you, you ask anybody, like investment advisor, that's just strictly stocks and everything else. So what's my income going to be when I retire? Well, it depends on the market.
Yeah.
It's like, would you
Yeah.
rather have guaranteed income or
Yeah.
maybe income?
No, guaranteed.
I like guaranteed.
Yeah.
I want to know what I'm spending. Or if the market goes down, you have to live on less.
Yeah.
Oh, I can't visit the grandkids this month because the market went down. What kind of life is that?
Yeah, I know.
Oh, the market goes up, we go to a cruise. Oh, it went down again. I can't go to a cruise.
Yeah.
I don't want that lifestyle.
No.
I want money coming in,
Yeah.
and I don't have to worry about that.
And especially if you can get it tax free,
Yeah,
Oh, yeah.
even better.
right?
The government can say,
Yeah.
because it's what? It's partnership, right? It's a partnership with the government where they have, every year they vote how much partnership they have with you.
Right.
And for some reason, it keeps going up.
It keeps going. It never goes down, right?
Well, we've had an exception the last, from 2018 to 2026
Oh,
because of the tax cuts for income tax.
Yeah.
That's the only difference.
Oh, okay.
Which is you could make up to $315,000 as a household, and tax federally at 24%. That's it.
It
Oh,
still
really?
seems like a lot though. 24%.
But it would have been a lot higher if it was before.
Yeah.
Oh, okay.
So what we're doing right now, another strategy we have is for my clients that want to convert their qualified plan to non-qualified. So we're doing every year we convert a small portion of it.
Mhm.
So by the time 2026 comes around, all their qualified plan or pre-tax money is all going to be tax-free money.
Oh, wow.
So it's actually good stuff. And
Yeah,
they're
that's
like,
really
I didn't know we could do this. Like, yeah, that's why you have me.
Yeah.
Right.
No, that's really good.
It seems you guys know how to get creative.
Yeah.
Especially come
Yeah.
tax time in the future. So
Totally.
that's,
It's the biggest concern people have is taxes.
Mhm.
If you look at this is a movie called Power of Zero. I don't know if you've ever seen it. It's a book as well.
Okay.
If you have a chance, actually, did I forward that to you?
I'm not sure,
Power
but
of
if you
Zero,
would have, I would have read it.
Okay, because look at Power of Zero. It talks about how taxes has to go up in the future if our country can remain solvent. And
Yeah, we're in
it's
super
concerned.
debt right now. Yeah.
Because I forgot the guy's name, but he was actually the comptroller of the U.S. government. So he's basically the U.S. government's CPA.
yeah.
He actually resigned in 2008, I believe. But he's been going over say, hey, things had to change. You got to plan for this. Is because taxes has to go up. It's no choice.
Yeah.
Because how much is our debt right now?
A trillion.
Trillion.
Like 23 trillion
Yeah.
almost,
Something
right?
like that. Some insane.
So I can't remember the exact number. I think if he gets to 40 trillion, nobody else is going to lend us money anymore, and we're going to be like Greece
Oh.
as a country. So it's in the book and it's in the movie too. So you if you ever see that,
I get it. Okay. that's
But
gonna
I'm
be
assuming that you talk to your clients and you already have them prepared for that,
yeah.
right?
Well, we make sure that because that's why it's called Power of Zero. If taxes double in the future, if you're at 0% tax bracket, what's 0 times 2?
good. Yeah.
Mm-hmm.
Still
Zero.
Zero.
That's
Right.
what we're trying to get to the zero. Some people you can't help because they have pensions, they have all this like stuff you can't convert, you can't actually. They already have the income coming in,
Yeah.
and so you can't really get them to the 0 tax bracket, but you can get them less taxes
Yeah.
for their other
yeah,
stuff,
yeah.
right? So some people it is too late, but others is not. So
Okay. Wow. That's really good. I gotta read this book now.
it's actually a good book.
It looks like you got a lot of homework that you can break down.
I'm very concerned now.
We should all be concerned.
Yeah,
right?
exactly.
I know.
Yeah.
Yeah.
But it's good to know though. This is good, really good knowledge. I'm glad you came in because it's a lot of stuff that I did not know about. That now it's gonna be like, okay, I gotta think about this stuff now.
Mhm.
Maybe giving you a call.
It's not gonna disappear. Put it this way.
Yeah, exactly.
Yeah,
You
You're
gotta
right.
plan for it now,
Yeah.
and the earlier you plan for it, the more time you have to actually recorrect yourself
Yep.
too.
Right.
Like I've have clients in their 60s and 70s, and I say, okay, we could just kind of reallocate certain things, but we can't go full on because it's too late. All right.
Yeah. So the younger, the better.
Yeah.
Right.
Yeah.
Right.
The ideal is someone that's in mid-career, like in their 30s, 40s, because they have more time to actually start implementing the strategies we have. 50s is fine too, because if they're already going to be taking income in the next 15 years, we can still help them.
Okay.
If they're in their 60s, we can still help them because we can kind of shift certain things, especially today, kind of get their accounts to non-taxable. So we can do a lot of different things for them too.
Wow,
So,
that's really good.
so everybody we can help. I was kidding.
Yeah, that's really good. No, that's really good. Oh wow, that's really good.
Yeah.
And do you provide do you charge for your services, for consultations?
No.
Okay.
Because we believe it's your information. My job is to show you what's available. And the other companies we represent, they pay us.
Oh, okay.
So, for example, you say, hey, I want to invest here, then that company will pay me.
Yeah.
My clients never pay me directly, which is good for the client as well.
Wow, that is really
So it kind of
good.
prevents what?
Mm-hmm.
All this craziness
Yeah,
that you've heard about.
Yeah.
Oh, yeah, make it up to Mr. Ruperto's investment fund. Right? A Tesla fund. Or something, right?
Wow. Okay.
The funds are actually made out to the company that they want to go with. Because we work with a lot of different companies. We're like a broker, so
Yeah. Okay. Oh, that's even good.
Awesome.
provide the best for our clients.
Yeah.
That's awesome.
If you could give your clients like a small piece of advice before we end everything here, what would you tell them, or maybe not to entice them into, but just a piece of advice that they could take,
Learn. You really got to learn about finances. Even just a little bit's going to help you in the long run. And if you learn from someone that actually knows what they're talking about, not what you read about or someone tells you on the radio, right? Because I know this one person that's on the radio a lot gives good advice about saving money and not getting into debt, but in terms of advanced concepts on actually have to grow your money, he gives the worst advice.
Yeah. Okay.
And I could tell you that I've seen what, and
Really?
and the recommendation he gives, I'm like, oh,
Yeah.
I guess he's sponsored by that. Oh, he is sponsored by that company.
Yeah.
coincidence.
Oh,
I think
gee.
not.
I think no.
But yeah, seriously, learn and take it personal. It's your money.
Yeah.
Nobody else is more concerned about your money than you,
Yeah.
right? I could
Very
say,
true.
oh, yeah, I'm concerned, but not really as much as you would
You
be.
are.
Because that's your money. So protect it.
Yeah.
Don't let ever give you advice that's going to take that away from you, especially you work so hard for it.
Yeah.
Right? They didn't work for it. They didn't put the hours.
Yeah.
That was you. So make sure you learn about what's out there.
Yeah. Awesome. That's good.
You guys got any other questions for him?
No, I'm good. Thank you. I want to say thanks for coming in. That was
Yeah, I
awesome.
appreciate
That
it.
was awesome. Yeah.
So where can we find you, social media wise? Phone
Yeah.
numbers, anything like that?
So for what's that? Can't think of the word now.
Instagram.
Instagram.
Oh, okay.
It's doctor.of.finance.
Okay.
Right on.
Okay.
And I'm on Facebook as well. It's just my personal name, Thiel Ruperto.
Okay.
And then also, you contact you guys. I'll give you my contact information if
Okay.
anybody's interested in learning more about the strategies we provide.
Awesome.
And then just go through you guys.
Awesome.
And we'll talk about some referral stuff too.
Oh, nice.
Right on.
Well, we appreciate that you came out today.
Yeah, no.
Of course. You paid for my lunch right now.
That's so funny.
We got to do this
Awesome.
again.
Yeah, definitely.
Absolutely. I loved it.
That was awesome.
Thanks, guys. Appreciate having
Thanks.
me.
Thanks,
Having me.
Thiel.
Absolutely. No,
Appreciate it.
Thank you for coming in.
Yep.
All right. We good?
Yep, we're good.
All right.
Awesome.
Mahalo.
Mahalo.
Did we get it in?
Yeah, we got it.
All right.
fun.
Awesome.
But yeah, there's a lot of stuff that
I know that.
you
That
guys
was.
can
I'm
do.
pretty sure that was just the little
Just the
piece.
tip of
He
the
knows.
iceberg.
We've talked a
Yeah,
lot.
Yeah, we've talked, and
We
I've
can talk
been
about